interest rates should come down. I think that even the Fed is going to be surprised at how low inflation goes. We think it could be negative this year.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses the crypto. According to Cathie Wood, Ark invested in Nvidia 10 years ago, when it was still in its early stages. Initially priced at $5, it has now increased to around $800. Ark purchased most of it during the upward trend, and Cathie Wood can explain her strategy. As a portfolio manager, it's not just one action, but rather the ripple effect it has on subsequent actions. Last year, Ark Investment sold his flagship Nvidia stock and invested the proceeds into Coinbase. She thinks Coinbase has performed well since then. Similar to a financial analyst, Nvidia is less recognized in the realm of cryptocurrency assets. Not everyone is familiar with or fully supportive of Bitcoin as a new asset class, etc. She prefers to explore less traveled paths, and as Ark was transitioning out of Nvidia, it seems like regulators are putting pressure on Coinbase, and Ark is taking advantage of every dip, including Nvidia. She was one of the sources for that purchase, so it's not just about what Ark does on the sell side, but also about his involvement in the process. Ark analyzes investments on the buy side and holds them in more specialized funds, and lots of things Cathie Wood discussed, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
It looks like that corporations are losing pricing power, and we are now beginning to see the unemployment rate move up. It went up to 3.9% in this latest report, from a low of 3.4%. So undeniably, it's on its way up now. And we do think it's because corporations are losing pricing power, their margins are getting hit. It's going to cause a couple of things. One, the labor hoarding that we've seen since COVID is going to diminish, and that will increase the unemployment rate. But then the second thing is it will accelerate the adoption of technologies. Innovation solves problems, and one of the things that it does is increase productivity, increase efficiency, and create new products and services. So we're pretty optimistic about our strategy in this environment because interest rates should come down. I think that even the Fed is going to be surprised at how low inflation goes. We think it could be negative this year. Well, I think the 24-fold increase in interest rates in little more than a year has shocked the system. We're beginning to see a reverberation of the regional bank issues. We don't think they are going away. Deposits are still outflowing broadly from the banking system. And there are increasing problems with commercial real estate. Most people know about the office problems, but multifamily units, multifamily apartments, we're beginning to see some distressed sales there as well. So I think that problem isn't as well understood, I think, and it's going to cause the regional banks even more problems.
Cathie, how quickly do you think unemployment can go up this year? What are you forecasting over at Ark?
Well, I wouldn't be surprised to see the unemployment rate go above 5%. Now, I'm saying that knowing that this is an election year and that this administration probably will try and spend more than is currently in the budgets through executive order or what have you. But above 5% would not surprise us. We do not believe we are in a bubble anything like we were in the late 90s. I was there, and the technologies weren't ready. The costs were too high, too much capital chased too few opportunities too soon. The seeds for what is happening now were planted during the 20 years that ended in the tech and telecom bubble, and they've been germinating for 25 or 30 years. So we believe we're ready for prime time. The one place where we could see a correction, and it's just a correction, we're not calling it the end of this at all, is in the chip space. Whenever I hear the word shortage, and we started hearing about GPU shortages about this time last year, as ChatGPT was capturing the imagination of both businesses and consumers. So for about a year, we've heard that word, and now we're seeing lead times, we believe, come down for GPUs, for Nvidia in particular, from the 8 to 11 month range to the 3 to 4 month range. So that is suggesting that there was probably a lot of double and triple ordering as the word shortage was making the rounds, and that those inventories will have to be digested.
But is that also because of an increase in supply in terms of output, or is it because you think demand is going down? Which one is it?
Oh, I don't think, no. Demand is not going down, though there is something we expect that I don't hear discussed very much. And it harkens back to the early days of the internet. There was a moment when the internet was taking off, when Cisco was all the rage. And then enterprises started thinking seriously about the need to spend aggressively on this new thing called the internet and the backbone. And they paused as a lot of competition started to make the rounds. And Cisco went down 50% plus as enterprises were pausing. Now, why are enterprises likely to pause or at least go through an assessment? They have to integrate all of their data first. Proprietary data is the secret to AI's success. And they have to map out in excruciating detail their workflows internally and with suppliers and customers and so forth. And this is going to take time. So we think this movement is real. It's going to be massive. But we think there's been a little bit too much too soon.
Ark is looking to capitalize on the next stages of the AI revolution. Nvidia has been making remarkable progress in the GPU industry, thanks to their exceptional execution and vision. This trend is expected to continue for a long time, with many other companies also reaping the benefits of AI. The productivity boost from this revolution is anticipated to be the most significant in history, benefiting numerous companies in the GPU sector. Let's back to the Cathie Wood interview.
So you're right. We were very early into Nvidia 10 years ago when it was $5. Now it's roughly $800. And we rode it most of the way up. But I'll tell you what we did. And this is, as a portfolio manager, it's not one action, but what it causes in terms of another action. Last year, we sold in the flagship Nvidia and put it into Coinbase. Coinbase, I believe, is up at least as much as Nvidia, and it is much less well understood. The whole crypto movement, the crypto asset movement, Bitcoin as a new asset class and so forth, is not well understood or completely accepted out there. So we prefer to go where others are not traveling as much. And, you know, as we were moving out of Nvidia, we were saying, okay, regulators are trying to crush Coinbase here, and we were buying it on every dip. Nvidia happened to be one of the sources for that purchase. So it's not just what we do on the sell side, it is what we do on the buy side that you have to look at. And yes, we do hold it in the more specialized funds, but we've been taking profits there as well for reasons I just described.
Indeed, TSMC is the manufacturer of these merchant chips. There's a significant story here, but it's essentially a cyclical issue related to the word shortage and TSMC. Last night, Broadcom reported their latest updates in the semiconductor solutions segment of their business. It's worth listening to the call for insights. Up only 4%, AI up 35%, but everything else down. It seems like there are some cyclical phenomena happening. Some stocks are not being fully considered in short-term expectations. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. and we will meet in next video. Thanks.